Let's talk about something that's happening right now, probably as you're watching this. Deep inside the world's biggest banks. While you've been going about your day, tapping your card, checking your balance, a quiet but massive revolution has been underway. We're talking about a huge technological upgrade, basically giving your bank a brand new, artificially intelligent brain.
And I want to be clear, this isn't some casual, run-of-the-mill update. Nope, it's a full-blown arms race. You heard that right. Global banks are in a mad dash, competing to deploy the most powerful generative AI they can get their hands on. They are pouring millions into tech from giants like NVIDIA, all to get that critical edge in a financial world that is changing faster than ever.
So, if you're picturing something from a distant future, like a sci-fi movie, you can stop, because this technology isn't just on the horizon, it's already here. It's working right now, inside the very banks many of us use every single day.
I mean, just take a look at the heavy hitters. Goldman Sachs, they've already rolled out an internal AI assistant to tens of thousands of their employees, just to make them faster and smarter. HSBC is going all in, self-hosting powerful models from the hot European startup Mistral AI to handle really core banking jobs. And it's not just them. Across the board, major institutions are snapping up NVIDIA GPUs to build their very own AI powerhouses from the ground up. So what's the big deal? Why is every bank scrambling to do this? Well, the promise here is nothing short of a complete transformation of banking as we know it. The goal is to make it smarter, way faster, and a whole lot more personalized for every single one of us.
So what does that actually look like in the real world? We're talking about AI that can spot super sophisticated fraud in milliseconds, way before you even know something's wrong. It means credit scoring that can look at way more data points to give more people a fair shot at getting a loan. And for you, it means personalized advice and summaries delivered right to your banking app. And behind the scenes? Oh, it's automating the mind-numbing regulatory work and even helping traders cook up entirely new investment strategies. It's a game changer.
Let's make this super concrete. Think about fraud detection. Okay, so a transaction happens. Instantly, and I mean in the blink of an eye, an AI model analyzes it and scores it for risk. Now, if something looks fishy, it doesn't just block it. And this is the key part. It creates a neat, easy-to-read summary and shoots it over to a human expert. That expert then makes the final, critical call. It's the perfect team-up of machine speed and human judgment.
This all sounds pretty incredible, doesn't it? Faster, safer, more efficient banking. It's almost too good to be true. So yeah, what's the catch? Because with any technology this powerful, you know there's always a catch. And this brings us to the other side of the coin, the peril. As banks rush to adopt these incredible tools, they're also cracking open the door to a whole new generation of really sophisticated dangers. And that's forcing everyone, from the banks to the regulators, to write a completely new rulebook.
And this is where things get a little scary, because the same AI helping the good guys is also giving criminals superpowers. That old clumsy phishing email with the bad grammar you could spot a mile away? Forget about it. Now it's a perfect deepfake voice call from someone who sounds exactly like your bank manager. That crudely forged document, it's now a completely AI-generated synthetic ID that looks absolutely flawless. The threats are getting way more personal and a whole lot harder to catch.
And hey, don't just take my word for it. This isn't just some hypothetical fear. The top financial regulators, groups like FINRA and FinCEN, are already sounding the alarm. They're sending out public alerts, basically shouting from the rooftops that criminals are already using this stuff and that banks must upgrade their defenses like yesterday.
But the risks aren't just coming from bad guys on the outside. Some of them are baked right into the technology itself. AI can hallucinate. That's a weird term, but it just means it makes up plausible but completely false information. There's the risk of sensitive customer data getting leaked. Criminals can also launch what are called adversarial attacks to trick the AI into making bad calls. And a huge one. Without incredibly careful testing, these systems could accidentally amplify old biases, leading to unfair decisions in things like lending.
Okay, so that was the doom and gloom part. But here's the good news. The smartest people in finance aren't just sitting around. They are already hard at work on the solution, which you can think of as building a kind of digital leash to keep this incredibly powerful tech under control.
Now, a key part of this digital leash is a clever technique called retrieval augmented generation. I know, it's a mouthful, so everyone just calls it RAG. Think of it like this. Instead of letting an AI roam wild across the entire internet, you give it a small, curated library of pre-approved, fact-checked documents. And it's only allowed to use information from that library to come up with its answers. It's basically a built-in fact-checker that keeps it honest.
And the difference that RAG makes is just night and day. An AI working on its own can invent facts, right? It can hallucinate. But with RAG, its answers are grounded in verified sources. Its answers go from being untraceable black boxes to having actual citations, just like a research paper. And this simple change transforms the AI from a creative but risky tool into a reliable assistant that's actually safe enough for the highly regulated world of finance.
So how do banks actually put this into practice safely? Well, responsible adoption isn't like flipping a switch. It's a really careful, methodical process. They start small with strategy and low-risk internal pilots. Then they move into building and evaluating the tech. After that, they go into production, but, and this is key, with a human always in the loop. And only then, after all that, do they start to scale up, all while monitoring everything constantly.
So, when you put this all together, what we're really watching is the future of finance being built in real time, brick by brick. And at the very heart of it all is this delicate balancing act, the challenge of harnessing all this incredible new power while making sure to maintain rigorous human control.
Because here's maybe the most important takeaway of all. The ultimate goal is not to just automate everything and replace all the humans. It's all about augmented intelligence. The AI becomes this unbelievably powerful assistant that can analyze data and summarize info at superhuman speed, which frees up the human expert to do what they do best: make the final, critical, nuanced decisions.
Which leaves us with one final big question to think about. Will your next banker be a human or an algorithm? Well, based on everything we're seeing, the most likely and honestly the most powerful answer is that it's going to be both, working together as a team.